This is the event is live now.
Okay. Thank you very much. Bismillah ar-Rahman ar-Rahim. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد. Imran Khan, over to you.
So this session, Shoaib, you would like to say something? Okay. So this session is about IFRS 18 and 19 SSCP based on our consultations and recommendations, adopted these two standards and issued a notification in December 2025 notifying these two standards. These two standards have an effective date of January 1, 2027, meaning thereby that these two these two IFRS accounting standards. Am I audible?
Mute है. अगर opening मुझे थोड़ा time देना आपने. After telling the people कि किस पे है.
Yeah, am I audible?
Yes, we can hear you. We can hear.
So over to Maqbool Saab.
Yeah, okay. Right. Honorable panelists, esteemed participants, Assalamu alaikum and very good afternoon. It gives me great pleasure to welcome you to this vital session hosted by the Accounting Standard Board of Institute of Chartered Accountants, Pakistan on the understanding of requirement of IFRS 18, presentation and disclosure in financial statement, and IFRS 19, which is subsidiaries without public accountability. The application of these standards has been notified by the SCP effective accounting period beginning on or after January 1st, 2027. The Institute of Chartered Accountants Pakistan continues to actively uphold its commitment to the international accounting community through its compliance with the Statement of Members' Obligation, we call them SMOs, which are issued by the International Federation of Accountants. They're saying that there's some echo in the sound. It's why, from my side, I'm using the headphone, shouldn't be. ICAP is a member of IFAC and its SMO compliance encompasses various dimensions such as standard setting, education, quality assurance, and investigation, disciplinary framework, etc. As a part of SMO 7, we are responsible for ensuring the adoption and implementation of IFRS as issued by the International Accounting Standard Board, thereby contributing to the global harmonization of financial reporting. In achieving this global harmonization, the role of Accounting Standard Board of Institute of Chartered Accountants Pakistan, which I have the privilege of chairing, is very important. The Accounting Standard Board is composed of a diverse and well-represented body of professionals and experts from various sectors, including audit practitioners, academia, industry, and regulators. This broad representation ensures that our deliberations and recommendations are grounded in practical realities and aligned with the global standards. The primary mandate of the Accounting Standard Board is to review, evaluate, and recommend the adoption of IFRS in Pakistan. The Accounting Standard Board also supports and provides guidance on the implementation of IFRS accounting standards and IFRS sustainability disclosure standard in Pakistan, ensuring consistency with global best practices while tailoring them to the need of our local environment. Today's session focuses on a very significant two new standards, IFRS 18 and IFRS 19, issued by the International Accounting Standard Board and adopted by Security Exchange Commission of Pakistan. As far as IFRS 18, presentation and disclosure in financial statement is concerned, it introduces a new structure to income statement and is a response to long-standing concerns from users of financial statement regarding the comparability and clarity of performance reporting. It aimed to enhance transparency, consistency, and the usefulness of financial information presented by companies in their financial statement, particularly in the statement of profit and loss account. They have introduced certain items which in profit and loss account in form of subtotal to be presented mandatorily, and categorization of item of profit and loss into operating, investing, and financing category. Also putting in place the requirement of specific disclosures on management-defined performance measures in a single note to the financial statement. As far as IFRS 19 subsidy without accountability, public accountability is concerned, it's also a very important development that offers a simplified disclosure regime for eligible subsidiaries, means the subsidies which are part of groups that apply IFRS but are not themselves public accountable entities. This standard is particularly relevant for jurisdictions like ours, where inclusion of subsidiary without public accountability in group structure is quite common. It seems to reduce reporting burden while retaining the integrity of information. As we navigate through the presentation and discussion today on these standards, I encourage each of you from the audience to ask post-presentation questions on each standard, which our distinguished panelists shall be answering. Let me take this opportunity to state that the successful implementation of IFRS 18 and 19 will not only elevate the quality of financial reporting in Pakistan, but will also meet the regulatory requirement. The pattern of today's session will be Mr. Imran, who is Director of Technical Services of Institute of Pakistan, will be making the presentation on IFRS 18, and then we will take in the question answer on IFRS 18. Then after the allocated time for question answer, then he will take up the IFRS 19 presentation, and then we'll take up the question on IFRS 19. So we should deal the two standards in a different timing. So once again, I thank you for your presence and expect an active participation. I look forward, inshallah, to a very productive session today. Thank you for joining us for today's webinar. Imran Sahib, the floor is yours to make the presentation on IFRS 18.
Imran, you are on mute.
You're on mute.
So IFRS 18, as the name tells, is about presentation and disclosure in the financial statements. Earlier, we had IS1, which provided guidance on the presentation and disclosure in the financial statements. ISP, considering certain requirements of the investors, such as disclosure of management performance measures, and the diversity in giving totals and subtotals in the profit and loss statement of profit and loss by the preparers. Considering that diversity, they have included some guidance in this IFRS 18, bifurcating items of profit and loss into various categories. So I'll be discussing them as well. So IFRS 18 is broadly what IS1 was, but with added requirements. So this presentation would be covering the added requirements which are there in IFRS 18 vis-a-vis those which were in IS1. So as I said earlier, IFRS 18 is, as Maqbool Saab said, that IFRS 18 has been adopted by SCCP and it is applicable, from the same effective date which was notified by ISP. That is accounting periods beginning on or after January 1, 2027, meaning thereby the companies which have their year ending starting from, let's say July 1, 2027, or banks, they have their year-end starting from January 1, 2027. So IFRS 18 will be applicable on those financial statements. As I said, IFRS 18 replaces IS 1, retaining many of its core principles. And IFRS 18 is about presentation of financial statements, basically a presentation of a statement of profit and loss. So there has not been any change in as regards in recognition and measurement requirements, of the financial statements items. So measurement recognition requirements remain same, but this standard, is about presentation and mainly presentation of a statement of profit and loss. There has not been changes in presentation requirements of a statement of changes in equity or statement of changes in other comprehensive income. And there is a limited change as regards statement of financial position. And as regards profit and loss, they have introduced certain categories into the statement of profit and loss, operating, investing, financing, and income taxes, and profit and loss for the discontinued operation income taxes. So these 5 categories. So I'll be discussing them in the slides. And they require, classification of income expenses into operating, investing, and financing, depending on the main business activity of the company. And there is a requirement to present certain, specified totals and subtotals in the statement profit loss. They have introduced, IFRS 18 has introduced a concept of liabilities arising from raising of finance, from transactions that involve raising of finance, which subsequently, based on that, guidance, the items relating to those liabilities need to be classified into financing category into the statement of profit or loss. So, and they have given disclosure requirement for management defined performance measures in a single note to the financial statements. They have given guidance as to what performance measure can be categorized, can be considered as management defined performance measure. So they've given a criteria. If your KPI, if your externally disclosed performance measure meets that criteria, then the requirement of disclosure requirement of MPM would trigger, and you'll have to give a note into the financial statement for that particular performance measure, management defined performance. There is a requirement to give disclosure of certain expenses in a single note to the financial statement. So I'll be discussing them. They have added a guidance on aggregation and disaggregation principles that govern the preparation of the overall financial statements. We generally follow aggregation and disaggregation principles when we prepare the financial statement. For example, the balance sheet and for example, the primary statements are the clear examples of what aggregation is about. And if you look at the notes, we have disaggregated information. So we generally follow these aggregation and disaggregation principles, but these principles have formally been included in IFRS 18 for the guidance. Then they have also included some changes in IS 7 as a result of IFRS 18. So I'll be discussing them as well. And as regards, as I said, there is a limit change as regards presentation of statement of financial position. So in the list of the items to be presented in the statement of financial position, they've added specifically goodwill. Previously in IS 1, it was not there. So they've added. Further, they have actually, via IFRS 18, they have made certain changes in IS 33, allowing certain additional earnings per share to be disclosed. As of now, if I talk about earnings per share, so we are required to disclose basic earnings per share and diluted earnings per share. But as a result of IFRS 18, we will be allowed to disclose additional earnings per share, based on certain numerators. For example, a subtotal given in the financial statement, for example, MPM, using as a numerator and dividing it by the number of shares. So I'll be discussing them as well, the requirement. So as I said, a statement of profit or loss is to be divided, the items into the statement of profit or loss need to be categorized into 5 categories: operating, investing, financing, income taxes, and discontinued operations. So they've given guidance as to what items of profit or loss would be categorized into operating, what items would be categorized into investing, and what into financing. In income tax and discontinued, that is clear. So how to categorize items of income and expenses into investing, financing, and operating category? So for a normal organization, for a normal manufacturing concern or a service concern whose business is not to invest or to provide finance, for them the rules are quite clear. that any item, any income generated by the rules are clear, the guidance is clear. As regards investing category, you will have to categorize income and expenses arising from assets which generate income independently of other assets. They have listed down certain assets, investment in associate joint ventures and consolidated subsidiaries. Income and expenses arising from these assets will be categorized into investing category. Income and expenses arising from cash and cash equivalents, these be categorized into investing category, and other assets, for example, investment property, if they generate a return individually and largely independent of other resources, they will be categorized into investing category. So the guidance is quite clear as to what is to be categorized into investing category. As regards financing category, the income and expenses arising from liabilities that involve raising of finance, for example, bank borrowings, for example, bonds. So any income or expenses that relate to these, liabilities that involve raising of finance will be categorized into financing category. And the second thing is interest expenses and the effect of changes in interest rates which relate to other liabilities. For example, pension liabilities, for example, lease liabilities. If attached to lease liability, there is an interest expense, or attached to a pension liability is an interest expense. So that expenses would also be categorized into financing category. And after clarifying these two categories, what IFRS 18 states that any item of expenses which is not categorized into these two categories will be categorized into operating category. So for a normal company, which is a manufacturing concern or a service organization which is not into investing business or not into financing business, the guidance is quite clear. But when an entity is into investing business or into financing business, the guidance is a bit different. Then in that case, you will have to identify as to what your main business activity is. So what IFRS 18 requires that you will have to identify your main business activities. And if your main business activity is investing into assets, particular type of assets, or providing financing to customers, then in that case, what items need to be classified into operating category would change compared to an entity which is into manufacturing or, let's say, service. So if you are into investing business, let's say if you're a bank, or let's say if you are a financial sector concern, and if your business is investing, or let's say or providing financing to customers, then what are the items that need to be categorized into operating category would be changed. So you'll have to identify the items which relate to your investing business would in that case be classified into operating category and not into investing category. So how to assess the business? IFRS 18 says that you will have to look at your business activities and identify as to what your main business activity is. And it gives you two sources of information for identifying your main business activities. First thing is your external reporting. If you are giving a note of operating segments only in your financial statements, then that note will help you as to identify as to what your main business activity is. And similarly, if you have an internal reporting process or an external reporting process, that reporting would also tell you as to what main business activity is. For example, if you are taking net interest income as your KPI, or if you are taking income from investment properties as your KPI, then in that case, investing business would become your main business activity. So if your main business activity is investing into assets, then the items of income and expenses that need to be categorized into operating activity would differ in that case. And then the items of income expense relating to your main business activity would be categorized into operating category. There is a point that there may be a case that a subsidiary has a different main business activity and the parent has a main business activity. And in that case, when the parent is preparing its financial statements, then they will have to look at as to what their main business activities, and will have to categorize their items of income and expenses accordingly as per requirements of IFRS 18. This chart shows as to how income expenses arising from assets, are to be categorized into statement of profit loss, into three categories: investing, financing, and operating. So if you are a normal concern, if you are a normal manufacturing concern or a business or a service organization in that case, and if you are investing into different assets, but your main business activity is manufacturing, in that case, your income and expenses arising from investment in associates, or let's say, or from financial assets, investment property, etc., or cash and cash equivalent, they will be categorized into your investing category. But if your main business is, let's say, is investing, and in that case you will have to look at as to what IFRS 18 says. So in that case, for example, if you are investing into associate joint ventures and unconsolidated subsidiaries, and income and expenses arise from them, then in that case, if you are following equity method of accounting for them, then the items of income expenses arising from those investments will always be categorized into investing category. That means that if you are even a bank, then in that case, if you are accounting an investment using equity method, in that case, equity method income and expenses rising from that equity method accounting would always be categorized into investing category. Otherwise, if you are not following equity method of accounting, then in that case, you will have to look at if you are a bank, then in that case, you will have to categorize income expenses arising from that investment into your operating category. Similarly, if you are a bank and if you have investments in financial assets, then in that case, that would be your main business activity. And if that is your main business activity, then the income and expenses arising from those investments would be categorized into operating category. And if for a normal organization, if it is not their main business activity to invest in financial assets or investment property, in that case, there the income and expenses arising from them would be categorized into investing category. Similarly, for cash and cash equivalents, if you have investment cash and cash equivalents, and if you are a normal organization, if you are a normal manufacturing concern, and that is not your main business activity to invest in cash and cash equivalents, in that case, the items of income expenses would be categorized into your investing category. If investing into financial assets is your main business activity, then in that case, you will have to categorize income and expenses arising from cash and cash equivalent into operating category. But if it is not your main business activity, but at the same time you are providing financing to customers, and in that case you will have to see whether the income and expenses arising from investment in cash and cash equivalent are related to income and expenses arising from providing financing to customers. And if there is a relationship, then IFRS 18 requires that in that case, income and expenses arising from cash and cash equivalent would be categorized into operating category. If those are not related, in that case, IFRS 18 gives you an accounting policy choice either to categorize the items of income expenses from cash and cash equivalent either into investing category or into operating category. For a normal operating assets, the principal, for example, in PPE or trade receivables, the principal is clear the items of income expenses arising from receivables and the PPE and other operating assets would always be categorized into operating category. As regards income and expenses arising from liabilities, so this chart actually depicts as to what requirements of IFRS 18 are. If you have financing liabilities that involve raising of finance, and you have items of expenses arising from them, then if you are a normal manufacturing concern also, or a service organization, in that case, that is not your main business activity to provide financing to customers. In that case, the items of income expenses arising from financing liabilities will be categorized into financing category. And if you are a normal manufacturing concern or a service organization, and if you have other liabilities, and in that case, there are two portions of expenses arising from other liabilities. One is normal, let's say, one depicts, interest expense or arising from changes in interest rates, and the other is a normal income expense. The normal income expense would be categorized into operating category, and the interest expense that relates to changes in interest rates, that would be categorized into financing category. For example, expenses arising on, let's say lease liabilities, or let's say pension liabilities. So if you look at or a retirement benefit obligation, in that case, if I take the case of retirement benefit obligation, we normally have an interest expense element, and we have normal service cost as well. So service cost element would be categorized into operating category, and the interest expense would be categorized into financing category. And there is a specific guidance for insurers in the IFRS 18 as regards income and expenses arising from instruments with participation features and insurance finance income and expenses. Those are required to be categorized into operating category. And if you are a bank, let's say, in that case, you will have to, if you have financing liabilities, and then you'll have to look at whether those liabilities are linked to providing financing to customers. If both are linked, then you will have to categorize the items and expenses from financing liabilities to your operating category. But if both are not linked, then in that case, you have an accounting policy choice, and you can categorize the items of an expenses from financing liabilities either into operating category or into financing category. IFRS 18 also gives guidance, also gives requirements as to where foreign exchange gains and losses need to be presented. IFRS 18 says that you are required that you should categorize the foreign exchange differences in the category into which the main item relates. For example, if you have incurred foreign exchange losses, expenses on import of inventory, and the inventory is being categorized into operating category. Inventory's cost of sales is being categorized into operating category. So the foreign exchange gains and losses relating to that in cost of inventory would be categorized into operating category. So you'll have to look at as to which item foreign exchange gains and losses relate, and wherever the main item is categorized into a statement of profit or loss, either investing, operating, or financing, in the same category, the foreign exchange gains and losses need to be categorized. However, at the same time, IFRS 18 gives you a room, gives you a relaxation that if categorizing the items of the overall amount, if dividing bifurcating the overall amount into these categories of foreign exchange gain losses, involves undue cost or effort, then you are allowed to categorize the overall exchange gain differences into operating category. As I said, they are now we are required to give certain subtotals in the statement of profit or loss. IFRS 18 requires to give 3 subtotals, basically operating profit or loss, and profit or loss before financing, and profit or loss for the year. So the 3 subtotals and totals are required to be presented in the statement of profit or loss. And where there is a bank, in case of bank, the second subtotal, profit or loss before financing and income taxes, might not be worthwhile. So the bank can title it, can recharacterize the name of this subtotal as to the items considering what that subtotal represents. For example, profit or loss from investing and operating. So they can relabel that subtotal appropriately. Okay, so IFRS 18 has introduced the concept of management-defined performance measures. So there is a background as to why this disclosure requirement they have introduced. The investors, in the annual reports, the companies have been reporting, various performance measures in their annual reports, in their external communications. So investors had concerns as to how those performance measures or KPIs have developed. They had concerns as to the transparency of those measures reported in the annual reports. So this is why the ISB has introduced this disclosure requirement into in IFRS 18. So the companies were actually giving certain KPIs, which are called non-IFRS based or non-GAAP based KPIs, such as adjusted operating profit, adjusted profit or loss, adjusted EBITDA, free cash flow, etc. So considering the concerns of IFRS of investors, the ISB has introduced this disclosure requirement, but there is a criteria to be met in order to identify a KPI as management defined performance measure. And if that criteria is made, then only a disclosure requirement would trigger and a note to the financial statements would be required to be given in the financial statements. So what that criteria is, IFRS 18 defines management defined performance measure as a subtotal of income and expense. A performance measure which is a subtotal of only income, or which is a subtotal of only expenses, or which is, let's say, based on a number in cash flow statement, would not qualify as management defined performance measure. So the first condition is that it need to be a total subtotal of income and expenses, and it should meet the following requirements. It should be other than those listed in IFRS 18. IFRS 18 gives you a list of performance measures which cannot qualify as management defined performance measures. So if a measure is, if for a KPI, for a performance measure to qualify as management defined performance measure, it should not be one which is there in IFRS 18, or it should not be one which is required by an IFRS accounting standard. So it should be one which is other than that listed in IFRS 18, or which is other than that required by IFRS accounting standard. For example, a subtotal, which IFRS 18 requires, for example, operating profit or loss, or let's say profit before financing and income taxes, cannot be a management defined performance measure. And the third condition is that performance measure would have been used by the company, by the entity in its external communications, in public communications outside financial statements. And the fourth condition is that performance measure depicts, shows the management view of an aspect of that entity's performance. So if these conditions are made, then only a performance measure can qualify as management defined performance measure. And if that those preconditions are made, then only a disclosure requirement would trigger. So subtotals excluded by IFRS 18. As I said, IFRS 18 gives a list. So this is the list: gross profit or loss, and similar subtotals: operating profit loss before depreciation, amortization, any payments, operating profit loss, income. There is a whole list. And it also says that a subtotal or let's say a performance measure similar to gross profit would not qualify as management defined performance measure. For example, net interest income, it cannot qualify as my MPM. Net rental income, it will not qualify as MPM. So IFRS 18 gives a list of performance measures which cannot qualify as management defined performance measure. So what can qualify as management defined performance measure? So if we look at the requirements, and if we look at what performance measures are being used by the companies, so the performance measures, we carried out a study, and based on that study, we understand that these performance measures can be used as a management defined performance measure under IFRS 18. EBITDA, that can be used as a management defined performance measure, subject to qualification, subject to meeting other conditions. For example, the company is using EBITDA in its external communications. Adjusted EBITDA, operating profit before restructuring costs. So these sort of performance measures can qualify as management defined performance measures, subject to the condition that the entity uses them in its external communications. So when we carried out that study, we noted that EBITDA is the most commonly used performance measure that can qualify, most used performance measure used in Pakistan that can potentially qualify as MPM under IFRS 18. So what are the disclosure requirements on IFRS on MPM in IFRS 18? IFRS 18 requires that if a performance measure qualifies as management defined performance measure, then you are required to give certain disclosures in a single note to the financial statements. You will have to reconcile that performance measure with an item with a total or subtotal disclosed in the financial statements. And you will have to explain in that note as to why that MPM is being reported, has been chosen by the company, by your entity, and explain and if you're changing that, and why you have changed that MPM, an explanation of how MPM has been calculated. So these disclosure requirements need to be made in a single note to the financial statements if your disclosed performance measure meets the requirement of NPM. So this is, as I said, a reconciliation is required to be given as to how that the MPM that you've used reconciles to a subtotal disclosed in the financial statement. So this is an example. For example, if a company has used adjusted operating profit, that is operating profit before restructuring expenses, as MPM and has disclosed it as MPM in its annual report. So the company would be required to give a reconciliation of that MPM with a subtotal given under IFRS setting in the financial statement. For example, in this case, operating profit. So in this case, a reconciliation can be given like this: that starting from MPM, you reconcile, you deduct your restructuring expenses, and you reach to the operating profit, which is a subtotal under IFRS 13, and simultaneously you also give a tax effect and effect of NCI of that reconciling item in the note on the management defined performance measure. As I said in the beginning, the IFRS 18 also gives principles on the aggregation and disaggregation. As I said earlier, the aggregation and disaggregation principles apply to all financial statements, the balance sheet, the statement of financial position, and the statement of primary financial statements are examples of aggregation principles. And based on nature of items, we categorize items data into different categories, different assets, different liabilities, let's say different income, different expenses. So we follow aggregation principles, and then when we look at the notes to the financial statements, we give certain information based on certain disaggregation principles, based on, let's say, function or measurement basis, size. So we generally follow them. So IFRS 18, gives explicit guidance, as to how aggregation and disaggregation, need to be done while preparing financial statements. So what IFRS 18 says is that, as I said earlier, aggregate based on shared characteristics and disaggregate based on a single dissimilar characteristics if it is material, for example, nature, and use appropriate meaningful levels. If I look at the financial statements, we normally disclose other income or other expenses, but IFRS 18 requires to give, to label as precisely as possible. I think considering IFRS 18 requirements, now you would not disclose other income or other expenses. You would rather disclose, as other operating expenses or other investing expenses or other operating income or other investing income. And you will be required to identify, disaggregate information as much as possible, categorizing items in other category as lower as much lower as possible, As I said earlier in the beginning, IFRS 18 gives a requirement for disclosure of certain expenses, in a single note to the financial statements. These expenses are, depreciation, amortization, employee benefits, write down of inventories, and impairment losses and reverses. IFRS 18 requires to give information on these 5 expenses in a single note to the financial statements, describing as to how the expenses have been categorized into statement of profit or loss into categories: operating, investing, financing, or capitalized. You will have to give information on these 5 expenses in a single note to the financial statements. Similarly, IFRS 18 requires that to disclose items either in the statement of profit loss, either based on the nature or function or a combination. But if you are disclosing items based on their function, then you'll have to disclose the items or the nature of those items in the notes to the financial statements. And this does not restrict, this does not exempt an entity from applying specific disclosure requirements which is there in other IFRS accounting standards, meaning thereby the disclosure requirements of other IFRS accounting standards still remain. However, this is an additional disclosure requirement given in IFRS 18. So this is an example of a note to the on those 5 expenses earlier discussed. In this example, if you look at the column of depreciation, we are showing as to total amount that was incurred as depreciation, total amount capitalized, and then total amount bifurcated into various categories and taken into operating category, and the difference of rupees 5 taken to investment category disclosed through a narrative at the end. So similar way, you will have to give a note on these 5 expenses in note to the financial statements. What are other changes? IFRS 18 has introduced certain changes in the statement of cash flows. As of now, we begun the statement of cash flows, with profit or loss before taxation. But post IFRS 18 implementation, you will be required to start the statement of cash flows. When you're preparing cash flows with indirect method, you'll have to start with operating profit or loss as the starting point. And meaning thereby the reconciling items or the non-cash items would relate to the operating category only, not relating to financing or investing. Similarly, now as of now we have choice to disclose interest and dividend cash flows either into operating category or into financing or investing category. For example, interest paid, we have a choice to disclose either into financing category or into operating category. This is similarly dividends received either into investing category or into operating category. But following IFRS 18 implementation, you will have to categorize these items into the category in which their related income has been disclosed in the statement of profit or loss. As I said earlier, IFRS 18 has introduced a new requirement for goodwill to be presented as a line item in the statement of financial position. And as regards earnings per share, the IFRS 18 gives room to give additional disclose additional amounts per share in earnings per share note, using numerators such as required income or expenses total subtotal as per IFRS 18, or MPM disclosed by the entity, or a common subtotal listed in IFRS 18. You change the numerator and denominator using denominator a number of shares as denominators, and determining an additional earning per share and disclosing that. So you are given a choice, a room to disclose additional earnings per share measures in your earnings per share note. So what are the challenges? If you look at the IFRS 18, so IFRS 18 basically changes your performance reporting. It basically changes the structure of the statement of profit loss, and it also introduces certain disclosure requirements of, let's say, management defined performance measure. It gives you aggregation, disaggregation principles we generally follow, and it gives you room to disclose additional earnings per share. So you will have, as regards statement of profit loss, the IFRS 18 requires you to give comparative information as well, and the IFRS 18 requires that it is to be applied retrospectively. So meaning thereby that you will have to change your comparatives, you will have to restate your comparatives as per requirements of IFRS 18. And IFRS 18 also requires to give detailed note on restatements carried out as a result of application of IFRS 18. So you will have to give a detailed reconciliation of as to how items have been recategorized from earlier categorization to the categorization that IFRS 18 required. So a note would be required to be presented in the first financial statement prepared under IFRS 18. And that restatement note is required not just in the annual report, but also in the interim financial statements. So that would require, implementing IFRS 18 would require, changes in your performance reporting. It would require changes in your systems. It would require, changes it would require training to your staff. Staff involved in the financial reporting would need to understand, as to what IFRS 18 says. And it would require, communicating those changes in your performance reporting to external and internal stakeholders, for example, your board or your other stakeholders. So this requires, lots of efforts, and the key is to remain proactive, and the key is to act as early as possible. So This is an example of a statement of profit loss of a normal, manufacturing concern. So if you look at IFRS 18 requirements, the items of income expenses are categorized into operating category. Then we have subtotal operating profit. Then we have investing category items, share profit from associates accounted for using an equity method of accounting. Then we have interest expense from cash and cash equivalent, interest income from cash and cash equivalent investing category. Then we have a required subtotal profit before financing income tax. Then we have items of expenses relating to financing category, interest expense on borrowings, interest expense on other liabilities. Then we have PBT, then we have interest income tax expense, and then we have a required subtotal of profit for the year. And we have, required category of expenses, income tax and discontinued operations. So 5 items of income expenses are categorized into 5 categories: operating, investing, financing, income tax, and discontinued operations. And there are 3 subtotals, required subtotals and totals: operating profit, profit before financing, income tax, and the profit for the year. This is an example of an insurer, an entity into insurance business. So the main business activity is for them is to provide, insurance services. And besides them, they invest into certain assets, as part of their main business activity. So the operating category items of expenses relate to their insurance business and related, investments. And then we have operating profit, required subtotal. Then we have investing, within the investing, we have share profit from associates, which is always required to be categorized into investing category. Then we have required subtotal of profit before financing, income tax. And then we have item of expenses relating to financing, that is interest expense on borrowings and pension liabilities. Then we have income tax expense, and then we have profit for the year, that is required subtotal. So we are showing in this statement of profit loss, items categorized into operating, investing, financing, income tax, and we are showing the subtotals, required subtotals of operating profit, profit before financing, income tax, and profit for the year. This is an example of a commercial bank, a statement of profit loss of a commercial bank. Their main business activity is to invest in the business, invest in investments, or they're providing financing to customers. So they are, if you look at the operating category, it says the items and of income expenses relate to the main operations. And then we have, operating profit. Then within the non-main investing, they have share profit from their investments in associates accounted for using the equity method. And then we have required subtotal of profit from operating and investing categories. And then we have a non-main financing expense, that is interest expense on pension and lease liabilities. And then we have profit before income tax, and then income tax expense, profit loss for the year. So in this statement of profit loss, we are showing items of expenses, income expenses into operating, investing, and financing. And we are, at the same time, we are giving subtotals and totals required by IFRS 18, that is operating profit from financing and operating investing activities, and profit for the year. This is an example of a concern of a listed company in Pakistan. So on the left side, we are showing their current presentation of their statement of profit loss prepared under IAS 1. So they are showing certain income and expenses into other income and other gains and losses, but within them, they have the share of profit from associates. They also have interest income from cash and cash equivalents. They also have, finance interest expense on borrowings and interest expense on other liabilities. So when they would be preparing IFRS 18, so they will be showing, not as other income or other gains and losses. They will be showing other operating income and other operating expenses. And similarly, the items which are now into the overall profit loss and relate to investing and financing would need to be categorized into investing and financing category. For example, share profit from associates accounted for using equity method, that would be categorized into investing category. Interest expense income from cash and cash equivalent, that would be categorized into investing category. And interest expense on borrowings, that would be categorized into financing category. And interest expense on other liabilities that relate to changes in interest rate, for example, lease liability, or less, for example, pension liabilities, that would be categorized into financing category. So the required subtotals are required to be given. Operating profit subtotal is there, profit before financing and income tax subtotal is there, and then we have a total of profit for the year. This is an example of an insurance company, local insurance company. So there presently they have this on the left side. We have their current statement of profit loss. On the right side we have statement of profit loss prepared under IFRS 18 requirements. So when they prepare their statement of profit loss under IFRS 18, so they will have to categorize their items of income expenses into operating, investing, and financing category, and the items relate to investing in financing, they would be categorized they would be required to be categorized separately into their categories. So in this case, share profit or loss, share profit from associates accounted for equity method, accounted for under equity using equity method would be categorized into investing category, and the expenses relating to financing or interest expenses on borrowings and other liabilities that relate to changes in interest rate would be categorized into financing category. This is the example of a bank. So on the left side, we have the current statement of profit loss prepared, under the requirements of IS1. So they are showing share profit from associates within the overall profit loss, not giving categorization. So when they would be preparing, a statement of profit loss under IFRS 18 requirements, they would be categorizing items of income expenses under operating category, investing category, and financing category. So within that operating category, they would be, disclosing their overall, financing investing businesses results, and except for those relating to, investment in associate and joint ventures, accounted for under equity method. And in that case, they would be categorizing the income and expenses rising from share of profit from associates, accounted for equity method of accounting under investing category, and in non-bank financing expenses relating to interest expense on pension and these liabilities that will be categorizing into financing category. So that's all as regards presentation on IFRS 18. That's all from my side. Over to you.
Okay, thank you very much, Mr. Imran, for making the detailed presentation on the changes introduced by the IFRS 18. And now we will be moving for question answer session. We will have about 30 minutes for that. And then we will take the 5-7 minute namaz break after 5:30 around. This is just for the people who are worried about their Asr namaz. So we will be taking a break for that. Then we will be looking at the presentation on IFRS 19 and that area's question and answer. We are starting, our learned panelists will be answering the question. And the chat box, I can see two things which I should respond at this stage. One is someone joined late, Masood Shah, and he was saying, can we make a short overview of the lecture? So we are probably recording the lecture that would be available for view later on at the link which will be available. And the second is you have asked the equity method to be explained shortly, and that is covered in IFRS 28 about the joint venture and associate accounting, which is the cost plus minus the change in the retained earning reserve of that entity since acquisition to date. That's called the equity method. But if you like more to ask on that, so you will be directing your question to our, which will be answered our panelists. Okay, with that, I request the participant to raise question. People can raise the question through the chat box. So you can put your question in the chat box, and we will also allow the personal question as well. But let's start with the chat box. So chat box, we had these two questions which I've answered, but one question is there in the chat box, which is someone, if Imran can read for you, you can, our panelists can answer. That was regarding a normal manufacturing and service company. The interest on lease liability will be in operating activity. Results are financing activity. That's the one question I saw in the chat box. So rest question can be dropped in the chat box. And we may, at the appropriate time, Imran, you can allow the panelists to raise the question. Okay, thank you. Imran, are you going to allow personal question or through chat box?
Through chat box.
Oh,
And
okay.
I think first I would ask these questions from panelists. So whatever the questions
I
are
think
there.
Imran, some of the questions have been answered by Khattab in the chat box in Q&A already.
Okay.
And there is one more question is regarding the reconciliation to be provided in quarterly reporting. So I think Khattab had explained that reconciliation would be required, I mean, on first time adoption of this, both in the interim and as well as the annual financial statements both. So I think that gets answered. So if you can ask other questions, or if anyone else wants to ask questions, they can do so.
There is a question for a manufacturing or a service company. The interest on lease liabilities will be in operating activity results or financing activity in the statement of profit loss. Khattab.
Thank you, Imran. So for a manufacturing concern, considering that probably the lease has been obtained as a financing arrangement, so this will go into the financing activity, the interest expense on the lease.
Yeah, another question is about equity method. I mean, Maqbool Saab has answered, but he's asking about the dividend treatment.
Sorry, Imran, what treatment?
Dividend treatment. So dividend treatment from associates is generally taken into movement of associates. We normally we take only share profit from that associate. That profit is actually number which includes that dividend portion as well.
Right.
Yeah, there's no change in the equity method of accounting. It's the same.
Yeah,
No
yeah,
change.
it remains same. But
Imran, there is a question on IS 12, the guide that ICAP had issued in this respect.
yeah, so levy. If you're asking about levy, so
It's in the chat box, the Q&A. Yeah. So ICAP issued a circular regarding IS 12 to show difference of minimum tax as levy as a line item at profit before tax. Will this now be included in under income tax expense again under IFRS 18? I think maybe Khattab can answer that as well.
Sure, sir. Thank you. So IFRS 18 has given a criteria for investing category and the financing category. So anything which is not going into the investing and financing category will go into the operating category. So because the levy will not fall into the financing category, it is also not a income or expense on cash and cash equivalent or investment in associate or investment in equity or debt securities. So that will land into the operating category of P&L.
Yeah, presentation copy, we have noted that, and that will be looked into and will be shared after this after today's webinar. That would be shared. Okay.
there is one more question. Since we once we provide reconciliation in our quarterly report, so do we need to present in annual financial statements as well? Yes, you are required to give reconciliation both in the retrospective. The reconciliation for the retrospective application is required to be given both in the quarterly financial statements and also in the annual financial statements. There is a question: is the format of profit loss available at the end of IFRS? Yes, IFRS 18, gives the guidance, and they have, given certain formats for different entities in actions.
What's the difference between KPIs and MPMs?
MPM is that, Khattab, would you explain?
Imran. So management defined performance measure. So there is a definition given within the standard. So if the management is giving any management defined performance measure outside the financial statements, which actually tells a story about any financial aspects of the entity as a whole. So that will be classified as a management defined performance measure. So not all KPI, but if those KPI meet the definition of MDM given within the standard, then those will be classified as MDM within IFRS 18.
Any other questions, please? A question about finance cost. Can you please read, Imran, for the panel? Let me say, what about the finance cost? If a company having business to sublend the obtained money, for example, microfinance company, is the treatment change in IFRS 18 or not?
What about a company having business?
Chief Sir?
Maqbool Sahab, I think there is one question on the change in business. So if there is a change in business from year 1 to year 2, so would that impact the classification in P&L? For example, IFRS 18 actually has given two specified main business. One is investing activity and the other is providing finance to customers. So अगर आपका ये business change होता है from I mean you were in this business in year 1 but you are not in a business in year 2. So year 2 की जो classification है अब वो आप IFRS 18 के हिसाब से change कर देंगे. Comparative would not change because the comparative was in line with IFRS 18 because that was your main business when you prepared that P&L. So you will apply this change from the date that you have actually changed your business, and there is also a requirement that you also need to provide a reconciliation because if I mean midway in the year you change your business, then you need to actually provide a reconciliation for the users to understand the P&L.
There's a question related to the unwinding also. So whether it will go to operating or financing. So it will depend, the item on which you are doing unwinding, where it is going. If it's going in operating, then it will go in operating. If it's going in financing, then it will go in financing.
Sure.
There is a question regarding we are a manufacturing company, but we have a property from where we get rental income. Do we need to disclose the rental income as a separate investing activity or shown in operating? But if you are a manufacturing company and property is like an investment property, then the rental income goes to the investing activity, not to the operating activity.
I think there is one more question on under IFRS 18. How would income and expense from associate and joint ventures accounted for under equity be classified? So nothing has changed in terms of application of equity method. जो आप IS 28 के अंदर अप्लाई कर रहे थे वो अप्लाई करते रहेंगे. The share in profit and associate or any other income coming from this will be classified in investing category. So उसकी सिर्फ category जो है वो investing होगी P&L में.
ये एक सवाल है, समझ में नहीं आया कि how the reconciliation between IS 1 and IFRS 18 will be made. I don't think कोई IS 1 और IFRS 18 की कोई reconciliation नहीं देनी, वो MPM
Not
की देनी
required.
होगी सब total reconciliation.
But I think, Zeeshan, there is a requirement that when you change it for the first time, adoption के ऊपर जो है last year
वो
जो
तो
चीज,
हाँ
हाँ तो वो sort of,
हाँ वो वाला नहीं,
हाँ वो देने जी.
वो वाला.
There is a question that what about the finance cost if a company having business to sublend the obtained money, example microfinance companies, is treatment change in IFRS 18 or not? तो वो तो स्पेसिफाइड बिजनेस एक्टिविटी यानी कि वो एक तो लैंडिंग बिजनेस में आ जाएगी, ठीक है ना, तो वो तो उसके लिए एक ऑपरेटिंग एक्टिविटी हो जाएगी. ग्रांट इनकम,
There is a question, if management frequently changes definition of MPMs year on year while remaining technically compliant, at what point would this be considered misleading under the IFRS 18, and how should auditor respond?
ऑडिटर के लिए तो हमेशा चैलेंज ही रहेगा, बट आई थिंक कंसिस्टेंसी इज द मेन प्रिंसिपल जो कि यूजुअली फॉलो होता है, कि कंसिस्टेंट ही होती है अनलेस के दे विल बी जस्टिफाइड कि भाई हम एमपीएम्स को चेंज कर रहे हैं. बट एवरी ईयर अगर वो चेंज कर रहे हैं तो डेफिनेटली ऑडिटर वुड कॉल फॉर व्हाई इट्स चेंजिंग एवरी ईयर. आई डोंट थिंक कि मतलब ये इतना इनकंसिस्टेंटली होगा कि एवरी ईयर वो अपने एमपीएम्स चेंज करते रहे.
generally it is not expected, but what can be expected is this, that in 1 year the company gives maybe one MPM, and then in the next year they come up with another MPM and probably giving more than one. I think the challenging part might be more that if they change the method of calculation of MPM every year, that might be more challenging, where the method that they are using in 1 year they are changing in the next year, the same thing, and but the MPM still remains the same. So that might be difficult for the auditors to actually evaluate that what happened last year and what happened this year. So that could be a point of concern for the auditor.
And just to add one thing, if there is a change in MDM, like अगर आप एक MDM दे रहे थे फिर आपने उसको discontinue करके दूसरा MDM देना शुरू कर दिया, so you're required to actually provide a disclosure in the financial statement that आपने इसको क्यों change किया.
Yes, reasons have to be given. True.
Yes.
There is, I am unable to understand this question. Will retrospective application of IFRS 18 also apply to changes in entities' specified main business activities? I don't know. किसी की समझ आई सवाल वैसे?
बिजनेस एक्टिविटी तो अभी स्पेसिफाई कर रहे हैं पहली दफा, आई थिंक इसके अंदर तो इससे
Yes.
पहले तो जनरली एक वो जाता होगा.
ये तो मैटर ऑफ फैक्ट होगा ना कि
हाँ.
डेफिनेशन ऑफ सेगमेंट या क्लासिफिकेशन कैटेगराइजेशन का जब मैटर ऑफ फैक्ट हो.
There is a question, how does the introduction of the operating profit subtotal in IFRS 18 change the starting point for the indirect method in cash flow statement? देखें, कैश फ्लो स्टेटमेंट अभी आप प्रॉफिट बिफोर इनकम टैक्स से शुरू करते हैं, फिर आप ऑपरेटिंग प्रॉफिट से जब शुरू करेंगे तो उस आइटम में सिर्फ वो ऑपरेटिंग के रिजल्ट्स आए हुए होंगे, तो उसके जो नॉन कैश आइटम्स होंगे वो सिर्फ ऑपरेटिंग वाले ही होंगे, उसमें कोई फाइनेंसिंग से रिलेटेड कोई नॉन कैश आइटम नहीं होगा. अभी जब आप प्रॉफिट बिफोर इनकम टैक्स से शुरू करते हैं तो जो नॉन कैश आइटम्स होते हैं उसमें कुछ फाइनेंसिंग या इन्वेस्टिंग के भी हो सकते हैं, सही है ना, लेकिन क्योंकि आप नीचे से शुरू करते हैं, जब ऑपरेटिंग प्रॉफिट से शुरू करेंगे तो उसमें ऑपरेटिंग रिजल्ट्स ही आए हुए होंगे जिसमें ऑपरेटिंग के इनकम एक्सपेंसेस ही आए हुए होंगे, तो नॉन कैश आइटम फिर आपके चेंज हो जाएंगे, वही लेंगे जो आप ऑपरेटिंग प्रॉफिट को बनाने में यूज हुए, उन्हीं को आप फिर आप सब्सट्रैक्ट या ऐड करोगे।
Please,
Where should grant income be presented in the financial statements of a hospital under IFRS 18? जी शोएब साहब, हॉस्पिटल के केस में ग्रांट तो उसकी मेन इनकम होगी ना।
if that's the, I mean, generally hospitals को अक्सर जगह से donations या grant मिलते रहते हैं, तो वो तो उनकी एक operating activity का ही part बनेगी. But it could be, I mean, again, it could be a factual thing कि वो एक one-off grant कभी आई है, then it may have to be evaluated where to put it. But generally, I think it will become part of operating activity.
There could be restricted grant, na? This is to be used for a specified purpose, maybe
हाँ
the putting up
बट स्टिल वो
the
इन्वेस्टिंग या फाइनेंसिंग में तो गिरेंगी नहीं ना,
हाँ
तो
हाँ
मोस्ट प्रॉब्ली ऑपरेटिंग में रेजिडुअल में ही जानी है।
operating, yes. Please explain the classification again for interest cost on pension liability under IFRS 18.
तो
मैं आंसर करूं? IFRS
जी
18 ये कहता है कि जो आपकी अदर लाइबिलिटीज हैं, यानी अदर देन दोज दैट इन्वॉल्व रेजिंग ऑफ फाइनेंस, उन लाइबिलिटीज, अदर लाइबिलिटीज में अगर कोई इंटरेस्ट रेट की वजह से, चेंजेस की वजह से कोई इंटरेस्ट एक्सपेंस या इंटरेस्ट इनकम आ रही है, तो फिर वो लाइबिलिटीज पे जो आपके इंटरेस्ट एक्सपेंस आ रहा है वो आपका फाइनेंसिंग कैटेगरी में आएगा हमेशा। मिसाल के तौर पर पेंशन हो गया, मिसाल के तौर पर आपकी लीज हो गई, उस केस में जो भी आपका इंटरेस्ट एलिमेंट होगा, मिसाल के तौर पर आपका कोई रिटायरमेंट बेनिफिट फंड हो गया, उसका जो भी इंटरेस्ट एलिमेंट होगा, इंटरेस्ट एक्सपेंस का एलिमेंट होगा, वो हमेशा फाइनेंसिंग में ही जाएगा।
राइट,
निशान, इसमें एक क्वेश्चन आया, अगर आप जवाब दे दें. हाउ विल अ होल्डिंग कंपनी हुज बिजनेस इज इन्वेस्टमेंट इन सब्सिडरीज एंड एसोसिएट्स will report its consolidated financial statement since holding company's business is different from that of subsidiaries?
जी
तो ग्रुप लेवल की बात कर रहे हैं.
ग्रुप की बात कर रहे हैं बेसिकली, कि
जी
ग्रुप लेवल पे जब होता है ना, तो आई थिंक वो तो ग्रुप लेवल पे ही उसकी असेसमेंट होगी कि भाई आपकी क्या ऑपरेटिंग एक्टिविटी के अंदर जा रही है। अब इसके अंदर ये हो सकता है कि यस, अगर कोई से के फर्ज करें एक बैंकिंग ग्रुप है और उसकी कोई इंश्योरेंस की सब्सिडरी है, तो उसका किस तरह से क्लासिफाई होगा, जो आज भी चैलेंज होता है। बट ये है कि प्राइमरीली तो जो कॉन्सेप्ट है वो ये है कि ऑपरेटिंग एक्टिविटी, अगर वो ऑपरेटिंग एक्टिविटी है, अगर वो उसको एज अ प्रॉपर सेगमेंट दिखा रहे हैं और अगर वो उसको उस तरह से रिपोर्ट करते आए हैं, तो वो सारा ऑपरेटिंग एक्टिविटी के अंदर ऑटोमेटिकली क्लासिफाई हो जाएगा, अगर वो सब्सिडी का बिजनेस भी मेरी वन ऑफ द मेन बिजनेस एक्टिविटी में आता है। और अगर वो नहीं आता वो मेन बिजनेस एक्टिविटी के अंदर, और मैं उसको एज अ सेगमेंट में भी कहीं नहीं दिखाता, जैसे IFRS 8 के अंदर नहीं दिखा रहा मैं उसको सेपरेटली, तो वो फिर जरूरी नहीं कि उसको हम ऑपरेटिंग में क्लासिफाई करें, वो फिर इन्वेस्टिंग के अंदर भी जा सकता है। फाइनेंसिंग में तो अनलाइकली होगा, बट डिपेंड करता है, मतलब अगर कोई मैन्युफैक्चरिंग कंसर्न है उसकी सब्सिडी, अगर कोई बैंक है, ये भी अनलाइकली सिनेरियो है लेकिन हो सकता है। अ, तो उस केस में भी हो सकता है कि वो फाइनेंसिंग उसकी मेन बिजनेस एक्टिविटी ना बने, अगर वो इतना सिग्निफिकेंट पार्ट नहीं है। लेकिन ये बड़े रेयर मतलब सिचुएशन होंगी कि एकदम ही अनलाइक बिजनेसेस हो। कॉन्ग्लोमरेट के केसेस में हो सकता है, जैसे हमारे यहाँ एंग्रो है, या एंग्रो में भी नहीं है, या फिर लकी है, लेकिन इनके भी जो बिजनेसेस अलाइंड है उसमें बिल्कुल ऑफ द कोई ऐसा हो कि वो फाइनेंसिंग या इन्वेस्टिंग टाइप की है, आ जाए, मुश्किल है, सब कुछ ऑपरेटिंग में ही जाके अल्टीमेटली गिरेगा। तो कॉन्सेप्चुअली तो वही है कि जिस तरह से आपको नॉर्मली अपने फाइनेंशियल स्टेटमेंट में करना है, तो ग्रुप फाइनेंशियल स्टेटमेंट में भी उसी तरीके से इसकी क्लासिफाई करनी पड़ेगी।
Yeah.
there is a question from Saad Farooq about a holding parent company which doesn't have any other business, rather just managing the investment in subsidy. And subsidy whole group have the same business activity, while the parent just activity is to manage the subsidy and maybe investment made in those subsidy. So they are asking about the classification. Will that be the same classification as of the subsidy, or there will be different classification of expenses in the profit and loss account versus holding parent company?
इसमें आई थिंक जैसे अगर वो सेपरेट फाइनेंशियल स्टेटमेंट्स बन रहे हैं होल्डिंग कंपनी के, तो उसके लिए तो वो एक सॉर्ट ऑफ इन्वेस्टमेंट उसने एक करी हुई है ना उसके अंदर, तो वो तो उसी तरीके से ही दिख सकती है कि इन्वेस्टमेंट एक्टिविटी हो, वही उसकी मेन भी है कि उसने इन्वेस्टमेंट करी हुई है, तो वो तो उसकी ऑपरेटिंग एक्टिविटी हो जाएगी। अब वंस द कंसोलिडेटेड फाइनेंशियल्स बनेंगे तो सिचुएशन वुड चेंज, फिर वो उसकी मेन एक्टिविटी वो हो जाएगी जो कि उसकी सब्सिडी की एक्टिविटी है। क्योंकि ओवरऑल कंसोलिडेटेड लेवल के ऊपर तो वही हमारे पास नंबर्स आ रहे होंगे।
अब वो तो कैंसल आउट हो जाएगा ना जब कंसोलिडेट
हाँ,
बनाएंगे, बहुत सी चीजें तो
वही कह रहे
ऐसा
हैं, वो वाली
कंपनी
तो एक्टिविटी खत्म ही हो जाएगी, इन्वेस्टिंग
कैपिटल
वाली आपकी
आर्टिकल सारे
ऑटोमेटिकली
एडजस्ट हो जाती है।
सब्सिडी की ही
वो
ऑपरेटिंग
इंडिविजुअल
एक्टिविटी बन जाएगी।
इंडिविजुअल इंडिविजुअल कंपनी का केस लग रहा है मुझे, जिसमें इंडिविजुअल के लिए पूछ रहे हैं कि पेरेंट इज होल्डिंग कंपनी ओनली हैविंग द इन्वेस्टमेंट इन सब्सिडी,
हम्म।
दैट्स तो इन दैट केस सिंगल अकाउंट सेपरेट अकाउंट की बात हो रही है।
हम्म।
एक्चुअली द असेसमेंट जो है आपका कि आपका मेन बिजनेस जो है वो फाइनेंसिंग है या इन्वेस्टिंग है, दिस नीड्स टू बी डन ऑन एंटिटी बाय एंटिटी बेसिस।
अच्छा।
तो आप जब सब्सिडी के अकाउंट्स बनाएंगे तो आप सब्सिडी को देखेंगे, और फिर अगर पेरेंट के आप सेपरेट बना रहे हैं तो फिर आप पेरेंट को देखेंगे कि उसका मेन बिजनेस क्या है। सो एंटिटी बाय एंटिटी आप ये कॉल ले रहे होंगे।
जी, एनी अदर क्वेश्चन?
सवाल है ये।
I think there is a question regarding what are the major changes required in financial reporting systems and internal controls to comply with the requirements of IFRS 18. I believe the key change is going to be the mapping of the GL accounts in accordance with the IFRS 18 जो P&L में जो इतनी significant changes आई हैं, I think वो सबसे ज़्यादा probably initial time taking activity होगी कि currently there is a possibility that some certain items are being mapped maybe as either operating, which may have to be moved to investing or financing or vice versa. तो आई थिंक फर्स्ट ऑफ ऑल जो एक्सरसाइज एक रिक्वायर्ड होगी कि इस वक्त जो विद इन दी अकाउंटिंग सिस्टम्स एंड डिफरेंट टाइप ऑफ अकाउंटिंग सिस्टम्स मुख्तलिफ ऑर्गेनाइजेशन में चल रहे हैं, तो वहाँ पे मैपिंग किस तरह से हुई हुई है। आई थिंक द फर्स्ट थिंग दैट विल बी रिक्वायर्ड, द मैपिंग हैज़ टू बी चेंज एंड ऑफ कोर्स उसी के हिसाब से फिर उसके अराउंड में प्रोसेसेस एंड कंट्रोल्स डिफाइन करने होंगे।
The question about lesser interest income on leases receivable. Which activity? Will it be operating or some other?
Lessors. If lessors is if its main business is to lease,
Business.
then वो तो investing मतलब उसको किसी operating
ऑपरेटिंग
business
एक्टिविटी
activity हो जाएगी।
इज ऑपरेटिंग एक्टिविटी हो जाएगी।
There is a question about loan from Provident Fund to meet the working capital requirement. Where should we place this interest income or expense? In both company account and the Provident Fund account.
For a company, if it's like a financing obtained from another organization, another legal entity, so and it would be categorized, income expense would be categorized into financing category, and for the PF fund, fund's main business is not to invest or is not to lend the company. It's not that its main business. So that would be categorized, the income that it generates from lending, it would be categorized into, I think, investing category. Please classify the treatment difference of interest cost on pension liability under IFRS 18 एंड IS1। देखें IS1 तो सिर्फ प्रेजेंटेशन पे था, उसने इस तरीके से कैटेगराइजेशन प्रिंसिपल्स नहीं दिए आपको कि आपने स्टेटमेंट प्रॉफिट लॉस में कहाँ कैटेगराइज करना है। वो इस चीज पे IS1 इज साइलेंट। IFRS 18 आपको कहता है कि पेंशन लायबिलिटी जो अदर लायबिलिटीज हैं और उनके जो एक्सपेंस जो कि चेंजेस इन इंटरेस्ट रेट्स की वजह से आए, इंटरेस्ट एक्सपेंस को रिप्रेजेंट कर रहे हो, वो आपको जो है आपने अपनी फाइनेंसिंग में लेना है। जी शेख साहब इस पे बोलेंगे
सॉरी,
कुछ?
वापस कहेंगे?
Please clarify the treatment of difference of interest cost on pension liability under IFRS 18 and IS1.
उसमें जो फॉर एग्जांपल जो पेंशन लाइबिलिटी के ऊपर जो इंटरेस्ट कॉस्ट है, वो तो आई थिंक स्टैंडर्ड बड़ा क्लियरली कह रहा है कि वो फाइनेंसिंग में ही जाएगी, ठीक है ना? तो आई थिंक उसके अंदर तो स्टैंडर्ड स्पेसिफिक कोई जजमेंट की भी रिक्वायर्ड नहीं है, इट्स वेरी
जी
क्लियर इन दी
जी।
स्टैंडर्ड, है ना?
There is a question. Telecom companies usually lease spaces on their towers to other operators, categorizing their revenues from such operating leases as other expenses currently. जो उसको फी देते हैं अपनी वो टावर्स जहाँ लगाते हैं, तो उस जगह वालों को वो on their towers to other operators, categorizing their revenues from such operating leases as other expenses currently. Will this move to investing category or continue to be treated as operating, being income incidental to their core operations?
नहीं, उसका मतलब टावर्स हैं उसके ऊपर अगर वो औरों को भी उसमें वो स्पेस भी दे भी रहा है करने को, तो जो भी इनकम आ रही है वो तो फिर उसकी ऑपरेटिंग एक्टिविटी है ना। वाई डिफरेंट क्यों होगी?
स्पेसेस
बेसिकली इसमें
समझ नहीं आया इधर से
इन्वेस्टिंग
पूछा है कुछ थोड़ा ना।
हाँ, ये सवाल समझ नहीं आ रहा।
हाँ, कंफ्यूजिंग सा लिखा हुआ है कुछ।
रेवेन्यूज
ये टेलीकॉम से अगर आपका कोई टावर से रेवेन्यू आ रहा है तो वो आपकी इन्वेस्टिंग कैटेगरी में उस वक्त फॉल कर सकता है, तो वो या तो कैश एंड कैश इक्विवेलेंट है या इन्वेस्टमेंट एसोसिएट है, या थर्ड ये है कि कोई ऐसा एसेट जो इंडिपेंडेंटली रेवेन्यू जनरेट करता हो फ्रॉम अदर रिसोर्सेज। अब ये तीनों में अगर फॉल नहीं करेगा तो फिर ये ऑपरेटिंग में ये इनकम आपके
मैं
चले
चला
जाएगी।
जाएगा। हाँ, ये मोस्ट प्रॉब्लम।
There is a
स्टेटमेंट
question. Can you
गुडविल
please
ये
clarify? Can you please clarify the reconciliation required? Please elaborate it. What kind of items will come into reconciliation? I think it's talking about reconciliation or about restatement required in the comparatives. जी खत्ताब।
जी इमरान, सो फर्स्ट ईयर ऑफ एडॉप्शन में आप एक रिकंसिलेशन दे रहे होंगे। सो दिस वाज द कैटेगरी जो आप उसको प्रीवियसली रिपोर्ट कर रहे थे, और अब आपने उसको मूव कर दिया ड्यू टू IFRS 18। कुछ चीज़ें आपकी इन्वेस्टिंग में चले जाएंगी, कुछ चीज़ें आपकी जो है फाइनेंसिंग में चले जाएंगी, और बाकी चीज़ें आपके ऑपरेटिंग में चले जाएंगी। सो दिस रिकंसिलेशन इनफैक्ट वन ऑफ द, जो आपने एक पिक्चर भी दिखाई थी जहाँ बैंक के अकाउंट्स थे, मैन्युफैक्चरिंग के अकाउंट्स थे, तो उसमें नज़र आ रहा था कि प्रीवियसली वो कैसे प्रेजेंट हो रहे थे और अब वो चेंज होके कैसे आ गए। तो वो आपको यूजर्स को बताना होगा कि आइटम्स जो हैं वो IS1 में कैसे प्रेजेंट हो रहे थे और अब मूव होके वो किस किस कैटेगरी में गए हैं, उसकी एक रिकंसिलेशन देनी होगी।
Okay, Imran, there is a question about changes in the presentational statement of financial position, which had only one change is made, which is the showing the goodwill as a separate line
Yeah.
item. Is there any other change? That's
No other
question.
change. No other
No.
change. As,
No.
yeah.
Okay, so I think we should stop here, and we request the participant to put their question if there's any other question in the chat box, so we can include if appropriate in a frequently asked question जो भी रिलेटिंग टू दिस स्टैंडर्ड होंगे तो वो जरा आप वहाँ प्लेस कर दीजिएगा। जो हमारी नेक्स्ट प्रेजेंटेशन भी चलती है उसमें IFRS 18 रिलेटेड क्वेश्चन रह गया हो जो कि स्टूडेंट भी आस्क, तो वो वहाँ पे आप डाल सकते हैं। ठीक है, so there is one fresh question probably from the sir Maqbool. If two entities define similar performance measure जो हैं differently yet remain compliant, does IFRS 18 risk institutionalizing non-GAAP measures rather than डिसिप्लिनिंग देम। जी, वो तो चॉइस है, एंटिटी का चॉइस है कि किस तरह वो करना चाह रही है। तो जी इमरान साहब।
I could not understand the question. The question is if two entities define similar MPMs differently yet remain compliant. देखिए
तो
ये एंटिटी
देखिए,
स्पेसिफिक मैटर। हाँ जी जी शेख साहब बोलिए।
this is an entity specific matter. They have to define the MPM and they have to disclose that MPM and how they drive at that MPM. ठीक है
कैलकुलेटेड
ना?
है।
तो वो कैलकुलेशन कैसे करनी है, हो सकता है कि इनकी कैलकुलेशन एक दूसरी एंटिटी से डिफरेंट हो, बट ये कि देर इज नो I mean restriction in this respect. So MPM is an entity specific and each entity can define their MPM the way they want to. बट जनरली देखें, अगर कोई एबिडा को एमपीएम ले रहा है तो जाहिर सी बात है कि एबिडा
वो तो
एक नॉर्मल चीज़ है। ठीक है ना? कोई उसको डिफरेंट तरीके से नहीं कर सकता। जनरली आप जहन में ये रखें, एमपीएम होगा तो वो पीएनएल के अराउंड ही कोई ना कोई चीज़ें होंगी। ठीक है ना? एडजस्टेड पीएनएल भी ऐसा होता है कि जी किसी साल कोई रीस्ट्रक्चरिंग आ गई, अब उन्होंने जो है ना उस साल के लिए एमपीएम दिखा दिया कि जी एडजस्टेड मेरा पीएनएल जो है, लेट्स से एबिडा या बिफोर टैक्स जो कुछ भी वो कहेंगे, दैट्स एक्सक्लूडिंग, दे आर गोइंग टू शो इट विदाउट द रीस्ट्रक्चरिंग कॉस्ट, right? So there could be different MPMs each year because a certain event may have happened that year, because of which the company wants to show that okay, my performance was not either very good or bad because of certain event that happened during the year, right? So वो तो हर entity के ऊपर specifically वो flexibility standard के अंदर रखी गई है।
और वो
ओके, मेरा एक क्वेश्चन
सिर्फ एक
मेरा एक
ऐड करूंगा
क्वेश्चन
कि
है।
वो
गो
नोट
अहेड।
में उसको रिकंसाइल भी करना होगा, उसको जो
करना
भी
है, हाँ,
एमपीएम वो
कैलकुलेट करना
यूज कर रहा है तो कैलकुलेट करके दिखाएगा वो कि भाई वो
Yes,
एमपीएम मेरा नंबर कैसे बना है। वो एक ऐसे सब टोटल या टोटल से स्टार्ट लेगा जो पीएनएल में डिस्क्लोज्ड है, और फिर वो
yes,
रिकंसाइल करेगा टू दी एमपीएम नंबर। तो उस तरीके
yes.
से ट्रांसपेरेंसी जो है आ जाएगी।
अच्छा, दूसरी बात जो मैं अभी पैनलिस्ट से बात कर रहा हूँ कि इसको एक्सप्लेन कर दें कि क्योंकि सिंगल नोट टू द फाइनेंशियल स्टेटमेंट के अंदर जो जाना है तो जाहिर है कि देयर वुड बी ऑडिटर रोल एज वेल टू सम एक्सटेंट टू looking at any item in the financial statement is subject to just maybe broadly look at and to get the satisfied on that। तो वहाँ क्या कोई अगर ऑड नंबरिंग यूज हुई है, ऑड कैलकुलेशन यूज हुई है, तो वहाँ तो क्वेश्चनिंग हो जाएगी या नहीं होगी?
नहीं नहीं,
So
ऑब्वियसली वो तो डेफिनेटिवली है। जब इस तरह की कोई चीज होगी, और जैसे ये प्रीवियस क्वेश्चन भी है ना कि अगर ये कि इनकंसिस्टेंट लोग डेफिनेशन यूज करें या वो करें, तो उन चीज़ों को भी ऑडिटर तो जब देखेगा तो कहेगा कि यार ये जनरली परसेप्शन तो इसका ये है, तो आप इस तरह दिखा रहे हैं या उस तरह। तो चैलेंज तो वहाँ होंगे ना चीज़ें, और ये चीज़ मोर और लेस फिर अलाइन हो जाएंगी ओवर द पीरियड। ऑब्वियस बात है, सबकी अपनी अपनी डेफिनेशन कैलकुलेशन है। स्टैंडर्ड ने भी रिकन्सलेशन मांग ली है कि अगर किसी को रिकन्सलेशन से पता चल जाएगा कौन सा आइटम लेस ऐड कर रहे हैं तो हम नहीं करें कंपैरेबल बनाने के लिए, तो लोग वो भी कर सकते हैं। लेकिन ओवर द पीरियड जब ऑडिटर उसको देखेंगे, रिव्यू करेंगे, ऑब्वियसली वो उसको चैलेंज भी करेंगे, उसको क्रिटिकली देखेंगे भी। तो ये चीज़ें खुद ही मेरे ख्याल से फिर उसके बाद आहिस्ता आहिस्ता अलाइन भी हो जाएंगी।
तो ये क्वेश्चन है कि अगर मेन बिजनेस एक्टिविटी जो है चेंज हो जाती है, जो कि वेरी रेयर होगा लेकिन हो भी सकती है, हो जाती है, और जो कंपैरेटिव होंगे वो रीअलाइंड होंगे फॉर कंपैरिजन पर्पस, ये क्वेश्चन है, उनमें रीस्टेटमेंट आएगी। दिस इज द क्वेश्चन।
अच्छा,
ये
अगर ऐसा कोई केस होता है कि आप फर्ज करें कि लास्ट ईयर तक इन अ बिजनेस ऑफ प्रोवाइडिंग फाइनेंस टू कस्टमर्स थे, और इस साल आपने वो बिजनेस नहीं है, आपका मेन बिजनेस को रिटेल आ गया है, तो आप इसमें जो लास्ट ईयर का पीएनएल है वो वैसे ही रहेगा, उसको आप रिटेल की तरह चेंज नहीं करेंगे, बिकॉज जिस साल आपने वो पीएनएल बनाया था वो आपकी परफॉर्मेंस एज अ मेन बिजनेस ऑफ प्रोवाइडिंग फाइनेंसिंग टू कस्टमर को दिखा रहा था, तो वो अभी भी दिखाते रहेगा। इस साल जो है वो आपका पीएनएल जो आपका चेंज मेन बिजनेस है उससे कॉरेस्पॉन्ड करेगा।
मैं भी ये रिकॉर्डिंग हम शायद इसकी अवेलेबल करेंगे, किसी जगह प्लेस कर देंगे, तो इसको रिकैप तो नहीं किया जा सकता इतनी क्विकली। वी हैव ऑलरेडी डिस्कस द मेजर चेंजेस, रादर आज की प्रेजेंटेशन ही मेजर चेंजेस के ऊपर थी। तो इसलिए उसको ओवरव्यू में रिकैप नहीं किया जा सकता, टाइम ज़्यादा चाहिए, तो वो रिकॉर्डिंग आपको देखनी पड़ेगी।
So I think we are short of time and we have to cover IFRS 19 as
जी
well.
मैं
So
वही कहने लगा हूँ कि इसे टाइम टू टेक about 5 minute break for prayer. People can be requested to leave themselves, log in, don't go off, and just after 5 minutes we can start the presentation on IFRS 9, IFRS 19, right? So just it's to, according to my watch, it's 5:34. So we start at 5:40. Restart at 5:40. A request that please remain logged in so that you should not take more time to join, and we should not have to wait. So we take just 6 minute break just for other prayer. Is it okay,
ठीक
panelists?
जी
Sure,
जी ठीक
sure,
ठीक
sure.
श्योर श्योर
Okay,
बाय
just 6 minutes. We are taking a break of 6 minutes. Okay, thank you. I'm back. जी इमरान साहब, आज वो है नीचे आ रहा हमारा। जी इमरान साहब, is there? Okay, Imran Saab, can you please start presentation of IFRS 19?
Yes, sir, starting. So IFRS 19, subsidiaries without public accountability disclosures. So IFRS 19 is, as the name tells, it is about financial statements of subsidiaries which are without public accountability, and it relates to disclosure requirements.
थोड़ा वॉल्यूम ऊंचा कर लें।
Yeah, IFRS 19 is with respect to preparation of financial statements by subsidiaries, which are without public accountability, and IFRS 19 gives a list of reduced disclosure requirements compared to disclosure requirements present in overall IFRS accounting standards. So why IFRS 19 was developed by ISB? There is a reason, and as I said earlier, that it has the same effective date that is of IFRS 18, that it is applicable for annual reporting periods beginning on or after January 1, 2027, and SACP has also adopted this standard with the same effective date. So where does this standard apply? The question is, IFRS 19 actually applies, in the preparation of financial statements by subsidiaries which are without public accountability, and the IFRS 19 defines as to what eligible subsidiaries are which can use this standard. And the IFRS 19 does not change the recognition and measurement requirements of IFRS accounting standards. So why this standard has been developed? There is a reason. There are actually two cases. One case is that both subsidiaries and the parent companies have been following IFRS accounting standards, and since the subsidiaries were also giving same set of disclosures which the parent companies were giving, and their users were not public at large, but actually, a small set of stakeholders. So they
ये पब्लिक का भी इसरार है कि आपका वॉल्यूम थोड़ा कम
इमरान,
है।
आपकी वॉल्यूम डाउन हो गई है काफी पहले के मुकाबले में, तो थोड़ा सा इसको
ब्रेक
देखें।
लिया मैं हाल इन्होंने कुछ ड्रिंक कोल्ड ड्रिंक लिया।
हेलो।
हाँ जी हाँ जी, जरा थोड़ा सा करीब हो जाए माइक के।
आई थिंक कोई टेक्निकल मसला आ गया। अ,
हमारे अकाउंटिंग स्टैंडर्ड बोर्ड की मीटिंग में भी परसों आया था, इसका वॉल्यूम कम था। वी आस्क्ड हिम टू रेज हिज वॉल्यूम, so then he had to call for the IT help. When IT help comes in, so naturally फिर वो importance has to be there. जी अस्सलाम वालेकुम इमरान साहब।
बस 5 मिनट ज्वाइन कर रहा हूँ, 2 मिनट,
हैं
2 मिनट में ज्वाइन कर रहा हूँ, 2 मिनट।
2 मिनट,
2 मिनट।
2 मिनट ज्वाइनिंग।
Am I audible?
Yeah, very much.
ठीक है
जी
सर, let's
बिल्कुल
start.
जी जी बिल्कुल बिल्कुल।
Yes, sir. So two key issues were there. I mean, I mean, that were the reasons why IFRS 19 was developed by ISB. The first reason is that there were some entities which were using full IFRS accounting standards, and they were subsidiaries of certain companies, parent companies, and both were, those subsidiaries were giving, full set of accounting standards disclosures required by IFRS accounting standards. So that was burdensome for those companies, and there were certain companies which were using, subsidiaries which were using local GAAP or IFRS for SME accounting standards, and while they were submitting their information to their parent companies for consolidation purposes, they were required to make certain adjustments in their financial statements to align their accounting policies and the numbers with those of their parent companies. And so this was a burdensome exercise. And considering these, two reasons, IFRS 19 was developed by IASB. So when the eligible subsidiaries use IFRS 19, they would be able to, to have solutions for these two challenges which they were facing. So there is an important concept of eligible subsidiary, and an entity under IFRS 19 need to be an eligible subsidiary in order to apply and take benefit from the use of IFRS 19. So that company should be an eligible subsidiary at the end of the reporting period. Before that, company can use and apply IFRS 19. It should be a subsidiary as defined in IFRS 10. It should not have public accountability, and its parent company should have publicly available financial statements. So what is public accountability? IFRS 19 has defined that concept as well, that an entity which has its securities listed on an exchange, or that entity is in process of getting listed on an exchange, that company has a public accountability, and or if that company, a company holds assets in a fiduciary capacity for approach for public, for example, banks or insurance companies or securities brokers, mutual funds, etc. So that company would have a public accountability. So the if a company is a company subject to public accountability, then that subsidiary, that company or subsidiary cannot avail the benefit of using IFRS 19. So when we were, going through we were having consultations on adoption of these standards, and the board, reviewed the requirements of IFRS 19 and the local, Companies Act requirements. We gave certain recommendations to SSCP in order to have, in order to cater the subjectivity which is there in IFRS 19, that whether a company can apply IFRS 19 or not, whether it holds assets in a fiduciary capacity. So if you look at the notification issued by SSCP, SSCP has added a proviso in its notification that if an entity that only unlisted subsidiaries without public accountability can apply IFRS 19 in preparation of their financial statements. In view of that notification, and it has referred to certain categories of companies listed in third schedule of the Companies Act. So based on that notification, if you look at as to which companies can apply IFRS 19, a company in order to apply IFRS 19 need to be a subsidiary, meeting the definition of subsidiary under IFRS 10, and should be an unlisted company, and it should not fall within clauses 1B2, 1B2A, and 1B3 of the third schedule of the Companies Act. That is, it should not be a asset management company, it should not be a pension fund manager, REIT management company, Madaba company, insurance, securities exchange, or security broker, banks, and microfinance institutions. So if an entity is any of these entities is from any of these categories, then that entity cannot, even when it is a subsidiary, it cannot apply IFRS 19 in preparation of its financial statements by virtue of the requirement given in SRO issued by SCCP. So for a company to use IFRS 19, it should be it should be a subsidiary as defined in IFRS 10, and it should be an unlisted company, and it should not be it should not fall in any of the categories, of the companies, stated in clause 1B2, 1B2A, and 1B3 of the third schedule of the Companies Act. So what does IFRS 19 say? If you look at the IFRS 19, it gives a set of reduced disclosure requirements, and at the same time, it also gives you certain choices as to when IFRS 19 can be applied. So IFRS 19 is actually an optional standard. An entity can elect to apply this standard in one reporting period and may later on revoke that election and give full set of disclosures in a later in later financial statements. And an entity can apply, can elect this standard to apply this standard more than once. And as I said, entity applying, in full IFRS accounting in one period can opt IFRS 19 in another period, or can switch back from IFRS 19 application to the full IFRS accounting standard. So IFRS 19 gives you flexibility. IFRS 19 requires you to state in the statement of compliance that you have required eligible subsidiaries, being a subsidiary eligible to apply IFRS 19, that you have prepared the financial statement in accordance with IFRS accounting standards and applied IFRS 19 in preparation of financial statements. So an entity applying IFRS 19 is required to give a statement of compliance and state application of IFRS 19 in the statement of compliance. And besides, stating that they have applied, IFRS accounting standards in entirety. But in Pakistan case, it would not be the case. In Pakistan, we have IFRS as notified by SCCP. So by virtue of SCCP's notification, IFRS 19 can be used by the companies which are eligible under that notification, and they can refer to IFRS as notified by SCCP in their statement of compliance while they take the benefit and they use IFRS 19. So what are the reduced set of disclosures contained in IFRS 19? Actually, IFRS 19 gives a set of disclosure requirements for each IFRS accounting standard. It bifurcates, meaning thereby that an entity applying IFRS 19 will apply relevant of IFRS accounting standard to the transactions, events, for example, balances. They will be using the requirements in IFRS accounting standards, but they will be giving a reduced set of disclosures as required by IFRS 19. So IFRS 19 gives a list of reduced disclosures for each standard. So key reduction disclosures by IFRS 19. When an entity is using IFRS 19, an entity will have reduced set of disclosure requirements. For example, disclosures required by IFRS 7, IFRS 9 on risk management of setting arrangements. There is a reduced set of disclosure requirements in IFRS 19 on this area. There are certain disclosure requirements of IFRS 12, regarding their subsidiaries, joint arrangement, associates. So there is a significant reduction in disclosures required, and disclosures required by I-16. IFRS 19 requires you to give disclosures on an aggregate basis rather than a specific item basis. There is a reduced set of disclosure requirements in regard to IFRS 2. Instead of detailed arrangement level disclosures as regards business combinations, reduced set of narrative disclosures regarding business combinations, simplified disclosures for material acquisitions, and aggregate disclosures for smaller acquisitions, rather than giving detailed disclosures as required by IFRS 3. So IFRS 19 actually gives you benefit, by requiring, reduced set of disclosures rather than, full set of disclosures required by other IFRS accounting. So there are certain standards, IFRS accounting standards, whose disclosure requirements, full disclosure requirements remain applicable when you use IFRS 19. These are three standards. IFRS 8 operating segments, IAS 33 earnings per share, and IFRS 17. So meaning thereby, if you are an entity using IFRS 19, in that case, for these three standards, all the disclosure requirements will apply. There is this slide shows an example of inventory. So we have disclosure requirements in relation to inventory in IS2, and there are certain disclosure requirements. So when we apply IFRS 19 in preparation of financial statements, we will not be required to apply, to give all the disclosures required by IS2, but a reduced set of disclosure. And for example, IS2 requires disclosure of circumstances which led to the reversal of provisions. And when we prepare the left side shows the disclosure as per IS2 requirements. The right side, in the remarks column, it states that the disclosure of circumstances of reversal of write-downs is not required under IFRS 19. So when we prepare financial statements as per IFRS 19, so not all disclosures of IFRS accounting standards would apply, and we will take benefit of it, and we will be required to give less disclosures. The other area is, as I said in the beginning, that the entities were facing challenges when they were preparing their individual financial statements based on IFRS for SME or local gaps, and when their parent companies were consolidating, they were required to make certain changes, adjustments in the financial statements of subsidiaries in order to align the accounting policies, and then consolidate the results of their subsidiaries, the statement of affairs of their subsidiaries into their financial statement, into parent company's financial statement. So what IFRS 19, helps. What help does IFRS 19 provide in this case? The IFRS 19 gives you a route to transition to IFRS accounting standards from your earlier GAAP or earlier, framework which you were applying for accounting of your subsidiary. So for that purpose, IFRS 19 gives you gives you a route to apply IFRS accounting standards, overall IFRS accounting standards. And when you apply overall IFRS accounting standards, certain adjustments obviously would arise. So for those adjustments to be recorded in the equity and in the statement of financial position, IFRS 19 requires you to follow the requirements of IFRS 1. Those requirements require you to prepare an opening statement of financial position on the date on which you transition from local GAAP or from IFRS to IFRS accounting standards. So I'll be discussing in the next slides as to what those requirements are when you transition from local GAAP to IFRS 19. So IFRS 1, when we transit from local GAAP to IFRS accounting standards, so under IFRS 1, we are required to give a reconciliation of equity, and we are required to give, we are required to give a statement of opening financial position as to how the transition has impacted the overall statement of financial position. And as per IFRS 19, you are required to give certain reconciliations relating to equity, the impact that has been on the equity on your transition from previous GAAP to IFRS accounting standards, and also a reconciliation of the total comprehensive income for the year in the year in which you first applied IFRS 19 and you transited from your earlier framework, let's say from local GAAP, for example, IFRS for SECs to IFRS accounting standards. So you will have to give a reconciliation of total comprehensive income for the year, starting from the comprehensive income amount that would have been if you had continued to apply previous GAAP and reconciling it to the profit or loss determined under IFRS accounting standards. So I will demonstrate it in the next slide. So overall, if you transit, there are actually four things which you are required to give in your financial statement. In your first financial statement, when you transit from local GAAP or IFRS for SME to IFRS 19, that is applying overall IFRS accounting standards. So first thing is in the date of transition, you will be required to give a statement of financial position. For example, January 1. And until last year, let's say December 31st, 2000 X2 X1, you applied, IFRS for SME accounting standard, and from 20 X1 you applied IFRS accounting standards with IFRS 19. and taking benefit of reduced disclosures under IFRS 19. So on the date on which you transit from earlier framework to IFRS accounting standards, you will prepare a statement of financial position. Similarly, as I said in the previous slide, a reconciliation of equity would be required in first set of financial statements prepared after applying full IFRS accounting standards or IFRS accounting standards as notified in Pakistan. So a reconciliation of equity would be required to be given in first set of financial statements under IFRS 19, and a reconciliation of total comprehensive income, beginning from the amount of comprehensive income that would have been had you continued to apply previous GAAP, and reconciling it to the profit comprehensive income for the year arrived at using IFRS accounting standards, and obviously giving explanations as to how transition from previous GAAP to IFRS accounting standard affected your financial statement of financial position, financial performance, and cash flow. So this is a demonstration of statement of financial position, first set of financial statement prepared using IFRS 19, and in which you transition from earlier framework, from, let's say IFRS for SME to IFRS 19 or IFRS accounting standards, overall IFRS accounting standards. So the comparative column, IFRS for SMEs shows numbers for the last year as per IFRS for SME accounting framework. The January 1 2000 X2 column is the date. January 1 2000 X2 is the date on which you transitioned from previous framework to new framework IFRS accounting standards. So this column gives you a number of the date as of the date on which you transitioned, and 31st December year 2020 X2 is your closing number for the year for which the financial statements have been prepared. So these three columns would be required to be given in the first set of financial statement prepared under IFRS 19 in case where you were previously applying a local GAAP or IFRS standard, and you transition from that GAAP or local GAAP or IFRS accounting standard to IFRS accounting standards. Reconciliation of equity. So reconciliation of equity would be required in the first set of financial statements from showing two reconciliations. First, at the date of the transition, in this case, January 1, 20X2. So 20X2 before adjustments, that is representing the amounts which were as per the previous framework, IFRS SME framework, and reconciling it to the amount to that were reached using IFRS accounting standards, and in between you're showing adjustments that were required to be made when you transition from earlier framework to IFRS accounting. Similarly, the same reconciliation would be required at the end of the year, numbers and starting from numbers as per IFRS accounting standards and reconciling it to the numbers which would have been had the company continued to apply previous framework and not IFRS accounting standards. So these reconciliations would be required in the first set of financial statements prepared under IFRS 19. Similarly, as I said earlier, a reconciliation of total comprehensive income in the first year of application of IFRS 19, when you transition from earlier framework to IFRS accounting standard, as a result of using IFRS 19, you would be required to give this reconciliation starting from IFRS number starting from a number as per your previous framework. For example, IFRS SME, if the entity had previously applied IFRS SME accounting standard, and reconciling it to the number which you have at the year end as per the IFRS accounting standard. So this reconciliation is also required as in the first set of financial statements prepared under IFRS 19, and in which case, in case where you transition from your local framework or local GAAP or IFRS standard to IFRS accounting standards. So there may be three cases when you transition from an earlier framework or from an earlier reduced set of earlier disclosures to IFRS 19. The first case is when an entity previously were applying IFRS semi accounting standard and it now transitioned to IFRS 19. So in that case, it would be applying IFRS accounting standards requirements, and obviously adjustment would be required, and it would be required to give a reconciliation of statement of changes in equity, and both at the date of the transition and at the end of the year, and also reconciliation of the total comprehensive income for the year, and will be applying reduced set of disclosure requirements as per IFRS 19. The second case may be when an entity applies IFRS accounting standards earlier. Subsidiary was applying IFRS accounting standards earlier, but not IFRS 19, and now it chooses to apply IFRS 19. So in that case, the entity's recognition and measurement was already compliant with IFRS accounting standard, but it was giving whole set of disclosures required under IFRS accounting standards. So when it chooses to apply IFRS 19 in Year 2, it would be giving reduced set of disclosures as required by IFRS 19. The third case may be when an entity applies, IFRS 19 and IFRS accounting standards. That is, applying IFRS accounting standards for recognition, measurement requirements, and reduced set of disclosures under IFRS 19. And in Year 2, it revokes the election to apply IFRS 19 but continues to apply IFRS accounting standards. So in that case, the company would be required to give full set of disclosures under IFRS 19, IFRS accounting standards when it transitions to full IFRS accounting standards when it revokes the election to apply IFRS 19. So what are the benefits of IFRS 19? As I said in the beginning, that there were two reasons why IFRS 19 has been developed. The first reason was that the companies were giving, companies earlier had those companies which had different framework, for example, local GAAP or using local GAAP or IFRS semi-accounting standards, when they were submitting their results, their financial statements to the parent companies for consolidation purposes, certain adjustments were required to align the accounting policies of with those of the parent companies for consolidation purposes. So this was a double kind of double report keeping required. So this when the entities transition to IFRS 19, this double exercise would not be required, and the other benefit that the companies would avail is that of having reduced set of disclosures rather than giving full set of disclosures required under IFRS accounting standards. So for doing this, companies would be required to make certain changes in the systems and in order to apply IFRS 19. So
Okay.
over to Maqbool Sahib.
Okay, you're done? Right, so it's the time for the question answer on this side. So there's one thing you might have noticed that when SCCP issued the notification, because in the third schedule there's a list of the public interest companies. So IFRS used the public accountable entities definition was different, but we in our third schedule public interest company definition. Therefore, when they issued the notification for the adoption, they specified the few category got out who are now permitted to apply IFRS 19, whereas had they kept in the category of public interest company, they wouldn't have been in a position to apply that. So the notification is basically giving the category, revise the category for this purpose due to that reason. Okay. After that, I would request the participant to raise the question, which will be answered by our learner, the panelists. Okay. Floor is yours. And the chat box or question answer, the box can be used for the question, which will be answered by the panelists. Okay, Imran sir, please look into the chat box and also to the question answer box. There's one question from Mr. Madhur Haq on IFRS 19. in the question answer box. Can you read it, Imran sir, for the panelists? Should I
If an
read it?
entity applies IFRS
Okay.
19 the preceding reporting period, but chooses not to apply it in the current period, does it still need to apply to provide comparative information for the preceding period? You mean to say that it now transitions to full IFRS accounting standard, and previously it was giving a reduced set of disclosures under IFRS 19. So when it revokes application of IFRS 19 and chooses to give full set of disclosures under IFRS accounting standards, so obviously it will be required to give comparative information as well for the preceding period.
So there will be much more work to do. I mean, once they revoke that election, in other words,
And
as full disclosure financials have to be given.
Yes, sir. And it's also the other way around. I mean, if they were applying full IFRS, but now choose to apply IFRS 19, so now the comparative will correspond to IFRS 19. So in that case, I mean, their job will become easier. But yes, if they go to full IFRS from IFRS 19, then the comparative, they also need to comply with the full IFRS disclosures.
Yeah.
Yes. Any other question on that, please? Mansub, there's one question that if a company elect to apply IFRS 19, as a result, they have to move to IFRS accounting standard for measurement and all for that purpose. And now, later on, if it elect not to apply IFRS 19, can it go back to the IFRS SME, which was its original standard, or once came to IFRS, then it would be difficult to go back to IFRS SME as well, because no longer want to take the benefit of a lesser disclosure? What would be the answer on that?
You mean transitioning back to IFRS local GAAP or IFRS for SME accounting standard?
Yes. They came to because of applying the IFRS 19, but because of that election, instead of using the IFRS SME or IFRS SSC, they have to come to the IFRS accounting, maybe notified by SACP, okay? Now later, when they elect not to apply the IFRS 19, and wish to go back to the original standard, which IFRS SME or IFRS SSC, which is according to the size and whatever the characteristics is, can they go back? Or once they came to IFRS, then it will be difficult.
I think we'll have to see the standard. I think I cannot answer as of now, but I
मेरे ख्याल में मेरा व्यू ये है कि मतलब वंस यू आर इन IFRS 19 में आप आ गए तो ऑलरेडी हम रिड्यूस डिस्क्लोजर्स पे आ गए, तो वो जो SME का जो पर्पस है उसको रिप्लेस करने का 19 से वो यही मकसद है। अब रादर देन गोइंग बैक टू SME लॉजिकल भी नहीं लगता, बिकॉज 19 ने ऑलरेडी रिड्यूस कर दी है रिक्वायरमेंट, तो वाई टू गो टू SME अगेन? तो कोई प्रोविजन इस तरह का है भी नहीं, स्टैंडर्ड में तो नहीं है कि इस तरह का। लेकिन ये है कि व्हेन यू हैव ट्रांजिशन फ्रॉम SME टू फुल IFRS और IFRS 19, तो फिर लॉजिक नहीं कहती कि फ्रॉम IFRS 19 से वापस आप SME की तरफ जाएं, मतलब वो ऑलरेडी रिड्यूस रिक्वायरमेंट्स है ना डिस्क्लोजर की।
नहीं, रिड्यूस रिक्वायरमेंट को तो फॉलो ही नहीं करना चाहते, वो कह लेट इट गो, कोई रिड्यूस रिक्वायरमेंट की हमें जरूरत नहीं है। इसलिए उन्होंने दे हैवंट इलेक्टेड द IFRS 19 फॉर द नेक्स्ट ईयर और 2 years later, and now they came to IFRS because they wanted to avail the reduced disclosure benefit. Now, because they don't want to avail it, so the question comes to mind is, can they go back to the IFRS SM if they choose so, or once they are in IFRS regime, then it should not be, they shouldn't be going back, should not go back. That's the point.
So, I think ये local regulation decide करेगी, उसका आंसर शायद IFRS में तो ना मिले, because as per the SECP requirement there are certain criteria for companies who can adopt IFRS for SME. अब अगर वो criteria फिर भी meet हो रहे हैं तो I mean that's my view, I don't know what SECP view is on that, but अगर वो criteria meet कर रही है जो भी requirements हैं SECP की, उसके हिसाब से तो जा सकते हैं. Otherwise, I have not seen any restriction in that. I don't know. Maybe Khattab has a different view on that. I don't know, but
Shoaib sir. I mean, usually when you go to I would say when you
Better.
upgrade your framework,
Hmm.
आप जो IFRS पे चले जाते हैं, so there is probably an understanding that you will now remain in the higher framework. I mean, to build up a rationale that you want to go back, वो थोड़ा मुश्किल होगा, because you voluntarily adopted a higher framework, which may be because you wanted to achieve a better presentation, better disclosures. So you adopted a higher framework. So you probably will continue with that higher framework.
डाउनग्रेड होना मुश्किल है.
Downgrade होना मुश्किल होता है.
Because you cannot justify, it would be given more fairer presentation. Actually, you cannot justify that.
जी,
Therefore, what Khattab Sahib is saying, to me, is make the more weight rather, it make more sense rather than it's more weight, I think. But it has to be looked at, Imran, as a
Yeah.
question, because currently, without IFRS 19 as well, this could be situation one voluntarily come to IFRS. Although IFRS SM is applicable, but come to the higher IFRS because we have given the provision in those, they can go for a higher standard. Once they go there, coming back to the then IFRS SME, IFRS SLC, which is maybe according to the threshold is good enough, good, applicable. But coming back, the question mark.
ठीक है sir, I'll look at it and discuss with you.
Yeah. Okay, any other question, colleagues? So we have about 10 minutes, Imran Sahib, if you can open possible the participants mic if they want to, they can unmute and ask a question. So allow them for the next 5-10 minutes because it will save our time.
I think time is over, sir. We had time till 6 p.m. Now it's 6:23.
Okay.
And I think, had there been any questions, they would have been raised. So there was only one question. I think we have answered that question. So if participants have any questions, they can write their questions into the chat box. We have another 5 minutes. If you want to, we can answer them. So anyone interested, anyone having any question, may write their question, his or her question in the chat, in the question and answer box, and panelists are here to answer.
Okay, my question is, Imran, if a public sector company which is not listed and also a sugar company which are there in the public interest company, if they want to avail this IFRS 19 reduced disclosure provision, as for the notification SECP, they can do it?
Yes, they can do it.
So SECP has restricted the public accountable definition to listed company and those companies which are holding the asset, which are in the financial sector are holding the asset as in a fiduciary capacity.
There's a list of entities.
Yeah.
Which I earlier elaborated in my presentation.
Yeah. Okay. Thanks. Yes, any other? question. Okay, so there's one question. Does the reduction in disclosure only apply to IFRS 2, IFRS 13, IFRS 15, IFRS 16, IS 12? So,
There
Imran,
is a
there are
there is
whole
a
list of things where the reduced disclosure will be available.
for each
Not
standard they have as I said earlier, I just give certain examples, where there are major reductions,
Yeah.
but there are changes, there are reductions in disclosure requirements, and there are three standards only where the disclosure requirements is remain intact. IS 33, and I think there are three standards, and for which the disclosure requirements remain same. IFRS 7, and I think operating segment IFRS 8.
Otherwise, across the board, there's a reduction in each area. There's a reduction of disclosure.
Yes.
So there are reduced disclosures and there are simplified disclosures. If I tell you as to what changes is, they have either simplified or they have reduced. Requiring information on an aggregate basis, for example, not on an item-wise basis, not on an arrangement basis, or not on a subsidiary level basis, but on, requiring aggregate information. So they have simplified disclosure requirements, or they have reduced disclosure requirements.
And other benefit is of this that because the subsidy will be using the IFRS basically with the due disclosure. So when it's come to consolidating, and then the job of the parent company would be much less because though that subsidy already applying the same basis and same policies or things which are of the parent company. So a lot of job would be, the extent of effort would be less at the level when they want to consolidate. Is that correct?
Yes. But obviously disclosure would be required to be made for the parent company purposes.
So,
and one more thing, Imran, just to add on that, there is an important condition that the subsidiary needs to have a immediate parent or ultimate parent as a listed company. So if there is no listed company in the group, then you probably cannot apply this IFRS 9 standard. So maybe immediate or ultimate ultimate parent needs to be a listed company.
Yes.
Yeah, but people are asking about the presentation and look into that and find a way to share with them. And also, as far as the recording of this webinar is concerned, if you can place
the recording would be placed on our channel. I think on the YouTube channel we have, so we will be placing that recording there.
Okay. So I think 5 minutes are over. There's no more question.
Yeah.
So we should thank our. First, I would like to thank Imran for making the detailed presentation on both standards. And we are grateful and we are thankful. We are thanking our distinguished panelists sparing the time to be with us to answer their questions using their expertise. And I'm also grateful to all the participants who have also taken time out and listened to us on these two very important standards. Particularly IFRS 18 is a very, very important standard. And I think this will help them to prepare for the adoption, implementation of the standard. And we had the intention of going for seminar in these standards, but because of the drive required in these days for the petrol saving and the energy saving, so we thought we should not postpone it. We should go using the webinar. So this is one thing. Second is we are also exposing the revised accounting and financial reporting standard for small size entity soon. When, Imran, any idea?
So inshallah by tomorrow.
By tomorrow, we will be circulating with the member the draft of the IFRS for a small size entity, because the whole regime of reporting is changing from 1st January 2027. Therefore, we are making the effort that we refresh the other standard as well. IFRS SME has been refreshed and it's with the SCCP, and soon it can also be notified. So we are looking at the IFRS for SSC, and also we are starting our work on the NPO standard as well. So next would come after maybe a couple of months, the exposure of NPO standard. So this is where we need your input in the form of comments. Then we will be holding the webinar and maybe seminar on IFRS SSC, because that's also very important. IFRS, almost 50% entity use the IFRS SSC as well. So there we would be also arranging the such session and also looking forward to your comments. Okay, thank you very much.
Thank you.
Thank you. Thank you very much. Thank you,
Thank you,
everyone.
everyone.
Thank you.
Yes.
Thank you so
Thank you, Khattab. Thank you, Shoaib Saab. Thank you, Zeeshan. And
Thank you.
thank you, participants.
Okay, Allah Hafiz.